All right, good morning, everybody. Thank you for tuning in to this week's S&P 500 sector spider preview. We're going to look at the various sectors that compose the S&P 500, and just I want to point out the important levels and trends that you should be watching, because generally when the market's making a move, you got to ignore what the idiots on television are saying. Most of the time it has to do with an important support level broke or an important resistance level broke, and then that spills over into the other sectors and moves the whole market. But anyway, though, I would like to point out this, as this is the anniversary of 9/11. Now, I was a trader back then, and I was in New York City that day. I was working in Midtown, and I did trade a lot with Cantor Fitzgerald and Keith Bryant. So unfortunately, I had a lot of friends that perished that day. But I just wanted to point this out because I noticed this back then. Okay, now this is the S&P 500 from July through December of 2001. Okay, and this is the 9/11 sell-off here. All right. What I want to point out is look at these days. Okay, the market's trending lower, right? But all of a sudden, you have this capitulation selling here. Now, this is the Thursday and Friday before 9/11. Okay, 9/11 was on a Tuesday. So, okay, so quiet week here. I guess that would be Monday, Tuesday, Wednesday. Anyway, look at this selling. Okay, so this is the Thursday before 9/11. This is the Friday before 9/11. That's the Monday. And then obviously there was no trading on 9/11. This is where the market opened up the following Monday. And, obviously there was this huge sell-off, but the Feds cut interest rates. And fortunately, the market rebounded. But anyway, I just want to point this out because I'm not really a conspiracy person. But I think it's pretty obvious that whoever was selling here knew something was going to happen. And it really doesn't take much. Just a couple rich Saudi Arabians that knew what was going to happen became aggressive sellers. Or anyway, I wish the government would look into this, but I highly doubt that that's going to happen. And maybe it's got something to do with all those pages from the 9/11 report that are redacted. All right, so anyway, this is what we believe over here at Bull's Head. Financial markets, prices are there certain price levels that are more important than others with regards to the amount of supply and demand that exists at them. In financial markets, prices are always doing one of three things. They're either going up, going down, or staying the same. And if you know where these levels and trends are, it's going to help your trading strategy, especially if you're a short-term trader. I think that technical analysis techniques such as harmonic charts or Gantt theories, UFOs, and Bigfoot type realm, it's fun to talk about, but it's really not credible. What technical analysis is supposed to show you is the supply and demand dynamics that are occurring in the markets. And that stuff just doesn't do that. But I'm going to show you what I look at. And I've been doing this for 20 years, more than 20 years. So, all right, so this is just an overview. You can print this out on my site. All right, so here's the SPYs year to date. I've been talking about this 286 level because it was an all-time high back here. So then it became resistance here. And, I said watch it for support, and sure enough, that's where the low trade was yesterday. So I would continue watch this for support if it breaks. Next level is down here at 280. Okay. This was an important level. You can see 2 times here. It was resistance here. On these occasions, it was overbought, so it sold off. But eventually it consolidated and got through here, and then it became a support level. So if that level breaks, I'd probably look around here, which I guess is about 268 for your next level. And then down here is 260, but let's hope it doesn't get back down there. Important to note, though, when you get to an important support or resistance level, in this case support, you see how it's oversold? There, it's oversold, meaning it's outside of this Bollinger Band, which means it's more than 95, which means it's more than 2 standard deviations away from the average. So 95% of the trading should be within these 2 bands, okay? And when it gets out of there, that's when things tend to revert. So just pay attention when something is overbought or oversold and gets to a resistance or support level. There's a good chance you could see a reversion, and with that is a tradable position. Like you could have gone short here, whatever. Could have gone long here. So right now the market is pretty neutral. You can see the RSI is right in the middle. So, and this is a Jewish holiday today. So I would imagine the volume is going to be very light today. All right, now this kind of played out pretty much as we expected or talked about last week. These things got gapped up, got very overbought, and now they're just trading down on some profit taking. I would watch the 72.50 level for support. You can see it was support here, and it was resistance here. If that breaks, 71 would probably be the next stop. You can see that was the lows here, and the top back here. So 72.50, if it breaks that, it gets to 71 pretty quickly. If this breaks, I would look at this level next, 68.60, because that was the bottom here in May and in June. All right, this is the financials, and these things are still trading around this 28.25 level. I believe yesterday's close was 28.30. So you could see this level was the top throughout this range here, which is March through June. You could see it was resistance here. It got through it, but we've basically been just consolidating around this level. So one of the things I pointed out last week is that the financials did not participate in the most recent rally that we've had, that when we got to new highs in late to or mid to late August. See, the financials have just been kind of trading sideways. So that's one of the reasons why I would say I'm short-term bearish on the market. We have the interest rate environment is concerning. The fact that people are overly confident is concerning. The fact that oil is up 40% over the last year is concerning. So I'm not saying sell the farm or anything like that, but I would just expect to see a little bit of downside over the next few weeks. This is a pretty cool long-term chart. This is the financials since 2005. You can see this is where they rolled over in January, basically within a point to where they rolled over before the crash back in 07. So this is a chart I like to show to people that say they don't believe in charts, because obviously that's an important level. And if we do rally, I would imagine we're going to run into significant resistance there again. Also, the SOX index, if you look at that, that is actually, it's not in this report, but it's trading right where it was before the market crashed back in the internet bubble. So that's pretty interesting. All right, so here's healthcare. So broke its recent uptrend, consolidating above this 92 level. This level has been support over the last week. The reason why it's support is because it was the high back here. So keep an eye on that. If that breaks, I think we could pretty much get back down to this level in a hurry. Well, I mean, not a hurry. I'm talking about over a few months, because there's just really no vested interest in here, right? It just didn't spend enough time trading at those levels. So all the people that sold it, that wish they didn't, that said they're going to buy it back if it gets lower, that's where support comes from. But there's just not as many as would be the typical case, because this thing rallied really quickly. So if it goes up fast, it could go down fast, and that's what we call refilling the gap or refilling the pocket. It's consumer discretionary. It's kind of the same thing, just broke over this level here. This 114 was the top of the range. Kind of broke its little uptrend. So we're just consolidating above 114. So I would watch the 114 level for support going forward, because it was the top of the range in July and August. If that breaks, I'm looking for support down at 110, because that was the bottom of the range here. and the top here. Okay, here's industrials. These things got back above the 7650 line, which you can see is important. Was the top here, was the top here, was the top here, top here, and now it's the bottom. Isn't this fun, folks? Isn't it amazing how like these levels just work out to be so exact? 71, 71. Ask one of your academic friends or a fundamental analyst how that happens. I mean, we're at different time periods here and here. Interest rates are different. Oil prices are different. The economy is different, but yet somehow magically this thing has the same valuation. So that cannot be explained by academics or random walks or fundamentals. It has to do with the fact that, like I said, in the market, there are certain levels that are more important than others with regards to the amount of supply and demand that exist at them. So clearly, 7650 level is more important than, say, you know, whatever is going on here, 73. So that's pretty cool. You can amaze your friends. All right, consumer staples. Again, there's another place where you can see how certain levels are more important than others. This 53 level, 5350 was support back here in February and March. It was resistance here in April. Now it's become the bottom of the range. So I would watch 5350 for support going forward. You can see we've just been consolidating here. Dan, take a look at this 50 level. This was the top all throughout May. All right. And the reason why I want to show you that is because we can see on this long-term 5-year chart how important the 50 level is. It was basically the exact top all throughout there or whatever. But, you know, that's only a couple cents, maybe 53.50. So again, no fundamental analyst could have a target that's that accurate. It was the lows in September, and then I just showed you about May. So long term, this is something to keep an eye on, because long term, if it breaks, we're going to see some meaningful downside. All right, here's the energy sector. This is a trade I talked about going short when this 74 level broke. And I did go short here, but unfortunately I got stopped out up here. So I took a small loss. I think this was just some kind of anomaly in the trading. It could be some kind of trade error, or it could be something like this. Like for instance, and just to keep the number simple, say some hedge fund wants to short 1 million shares of it and they want to be 10% of the volume, right? Well, if 1 million shares is on the tape, then that hedge fund is shorted 100,000. Now say all of a sudden a big print goes up or a big block goes up, say 2 million shares. Now there's 3 million shares on the tape. So this hedge fund has to sell 200,000 shares basically right away to catch up with the volume to be 10%. So if the algorithm isn't programmed correctly, or it isn't entered correctly because the trader messed something up, you can see some action like this. I mean, it reverted right back. So that's why I think something anomalous happened. Anyway, I would still consider this as a short. 73, this would be my stop out. Down here would be my target, because that's where this top was here. And again, you can see this ran up fast, which means it didn't collect a lot of vested interest, which would translate into support. So it could go down fast as well. There's another interesting long-term chart here. This is energy since 2015. You can see how this thing basically got right to 78 and rolled over 3 times. So that's another important level to watch long term if this thing rallies, or when these things eventually rally. All right, materials. They continue to trade between 60 and 58. Nothing too exciting here. And last, utilities. These things continue to consolidate around the 54 level. I mean, if they head lower, I'd be looking for some support at 52. If they break that, I'd be looking for support at 49. All right, everyone. Well, thank you for tuning in. Hope you have a nice, somber day. And remember, count your blessings, because who knows what tomorrow brings. And I will look forward to speaking to you next week. Thank you.